let's go straight into the first management that we've lined up for you on the show today. Aeroflex, that's the one that registered a 16% revenue growth in the second quarter, slightly lower than the guided revenue of 25% for the entire year. The margin, however, expanded while the company is also onboarding new capacities in December 2024 itself. So to tell us about everything that is happening and likely to happen, we have with us Asad Daud, who is the managing director at the company, joining in. Thanks a lot, Asad, for joining in. 25% is what you guided for, 16% is what you've done. Do you still hold on to that 25% guidance, especially with the capacities coming in on December?
Yes. So first of all, a very happy Diwali to you, to all your viewers, and also to all the investors. So yes, in terms of our guidance, so we are looking at a growth of 25% for the entire year, especially in terms of our profit margins, and I'm sure we'll be able to surpass our growth in terms of the profit. In terms of the revenue, we are looking at a growth of about 20 to 25%. Especially on account of the increase in the capacities that we have already commissioned and will be commissioning in this quarter.
So just to clarify, 20 to 25% is the revenue band that you've given, revenue growth band, and profit growth will be upwards of 25%, right?
5%, yes, that's right. That's correct.
All right.
Okay, all right. Hi, Asad, and good to see you in. It's been a long while since we chatted. Well, give us a few more details then. You know, what's the outlook on the working capital cycle? There appears there was a couple of pockets that got stretched. So how do you see this panning out?
Yes. Hi, Nigel. Yes, the working capital in the last 6 months actually have got stretched a bit. This is purely on account of the Red Sea crisis. So a lot of shipments have been delayed. A lot of the vessels have been skipped. So that has lead to increase in the requirement for working capital. I guess for the next couple of quarters, it would remain high. But I think hopefully from the next financial year onwards, I think we'll be able to see some reduction in the working capital cycle. So let's see. Right.
Okay. Some improvement is what you see in the next year. But what about the margins? You said 20 to 25% would be the revenue growth. Net profit would be 25%. If your revenue grows by 20%, then obviously there is margin expansion that you're building in. But in case your revenue grows 25%, then are you likely to see margins at around that 20.5% itself, which you've done in the first half? Or do you expect it to go to your earlier guided band of 24-25%? By when?
So if you see that in the first half of this year, our EBITDA margin has increased by almost 100 basis points. And we are looking at 24 to 25% EBITDA margins over the next 3 to 4 years. So on an average basis, if you see, it will be like about 100 basis point increase in the margins every year. And obviously with the increase in the top line, plus with regards to the new capacity and the new products that we have lined up, I'm sure that we'll be able to achieve our targets of the profit margins.
Asad, a couple of questions here. One is in terms of the inorganic opportunities. You briefly mentioned about that you're on the prowl. Anything we should hear about in the coming quarter, second half of this fiscal? That's point number one. And in your export mix, are you seeing pressures in terms of demand? Because the talk is that the globe is slowing down, though there are various geographies that are still doing very, very well.
So in terms of the inorganic acquisitions, we have already completed one at the start of this financial year. We acquired a company called High Engineering, which is into the fittings business. We are also in talks with a few companies for potential strategic investments. Obviously, it is at an extremely early stage, so would we only be able to comment once anything materializes. With regards to the demand, so yes, some regions of the world are slowing, especially in terms of Europe. But our focus has been over the past 2 to 3 years to focus aggressively on the Middle East and also in the USA market. So hence you see that now almost 57% of our total exports is to the America region. So hence the European is down, but the US region is going pretty good.
That's interesting because we have a lot of imponderables from the US as well in the next month itself. We have the elections and a lot of developments out there. Just wanted to know on the metal bellows business itself. Your capacity in December is coming in on metal bellows, 120,000 pieces. At a peak utilization, when both the phases are completed, what could the revenue potential be here? And have you locked in on any clients already? Because I remember you were saying that you were in talks with a couple of them.
So yes, hopefully in this quarter we will start with the trial production for the bellows, and the commercial production would follow after that. We have already started discussion with our existing customers with regards to the bellows. Our design team has already started working on the design of the bellows, and with regards to the two phases of the bellows. So right now we are completing phase one of the bellows. So at a peak capacity, we would be reaching a turnover of about 80 to 90 crores from the bellows division itself.
That's in the first phase.
That's in the first phase, yeah. First
And
phase.
second phase obviously would be a little more than that, about 120, right?
Yes, so a total would be about 200 crores after both the phases are commercialized and into full-fledged
And what margins
production.
do these bellows give?
They generally give margins, in terms of the EBITDA margins in the range of 25 to 30%.
All right, take that point. Thank you so much, Asad, for joining in.
Thank you.
Higher margin businesses coming in on stream on December. You are hoping for 20 to 25% revenue growth with 100 basis points margin improvement. Wish you good luck for this year, more importantly for the next year, as exports hopefully pick up as well and the outlook on the globe improves. With that,